networks in real estate, and that is Gary Brandeis. Gary, welcome.
Thank you.
And,
Hi everyone, good morning, sorry. I'm still on East Coast time, so good morning. Well, thank you for the opportunity to speak with you. Thank you, Dave. We have a great panel this morning, and we're going to try to get some good conversation going. Try to spark some controversy and get maybe even a little disagreement on the stage, which, in my opinion, in my career, some of the best ideas and some of the best things we've ever done in my company have been through some very spirited conversations amongst myself and my people that I work with. So can I call up our panel? Sam Grossman, Shannon Robnett, hopefully I pronounced that properly, and Teresa Kennedy.
Have a seat, grab the microphone.
You want this one?
Thank you for being here. So just a little bit of background. I'm going to ask everyone to introduce themselves. My name is Gary Brandeis. I work with REtoken, specifically on the real estate industry. And my background is, I've been a real estate developer for over 30 years. I'm in the trenches every day. My company is a boutique vertical real estate company where we raise our own capital. We put it in commingled real estate funds. We then have discretion over that capital, and then we buy assets: office, hotel, retail, multifamily, office. I said that already. And then we get to work. We build ground-up construction. So we buy infill urban sites and build from the ground up. And we buy historic buildings and renovate and reposition. We buy office buildings that are vacant, and then we get our hands dirty, and then we hopefully create value, and then we operate those assets for as long as we want to hold on to those assets. So over a 30-year period, I've been doing real estate deals. That's what I've been doing. So I've also kept myself in the technology space. I was a .com CEO, started one of the successful real estate .coms back 20 years ago, and then ever since that time, there's always been a huge process for me and our company in the intersection of technology and real estate. So when I started to educate myself about blockchain, I sort of felt the same way I did 20 years ago. I felt that this was a really great time to educate myself in this space and really try to understand the impact on our industry. And so that's what this conference is really set to do, and I'm really excited to be here, so thank you. Can we go down the line and introduce ourselves, or introduce yourself, please?
Good morning. My name is Shannon Robnett. My story is similar. 27 years in construction and development. I'm a second-generation builder-developer, fourth-generation realtor. My son has followed me in the real estate business. I guess I should have had him go to college. But, we've been doing a lot of the same things. And in the last 18 months, we found ourselves at the intersection of not enough capital and too many deals. And we kind of forayed into the syndication space and found that there's capital there, but there's not a lot of liquidity in that market, and there's not a lot of transparency. And so through a chance meeting with the guys at REtoken, Colin especially, we kind of have stumbled into this space and have become energetic students in trying to figure out how to make illiquid assets liquid again, and how to bring this product, this syndicated product, this ability for middle America to participate in what Wall Street has held apart. And so I'm really excited to be here this morning.
My name is Sam Grossman. Dave just ran into me in the hallway and asked me if I'd come talk, so here I am. No, I'm just kidding. Like so many of us, I was 6 months ago, I was just a real estate developer. I knew nothing about blockchain and the words that we're not supposed to talk about in this room anymore. And I was looking for a platform to really better manage my data. I'm in multifamily value-add real estate, and I became a client of Invenium because I thought that they were a great one-stop shop for all my data storage and valuation. And here I am 6 months later talking at a blockchain convention about tokenizing and securitizing data and valuing real estate and creating liquidity to illiquid assets. So that's what Invenium does. That's what I do for them. I help the owner-operators like us just try to make our data more transparent and more accurate.
See what you get for asking the wrong guy the right question.
I know.
I guess that leaves me. I'm Teresa Kennedy, and I started in real estate back in 2006 at a real estate company called Village Real Estate that helped turn Nashville into one of the leading cities in the country that it is today. I started in real estate after graduating from Vanderbilt University and completing an MBA in technology management. Today, I sit as a director on the Atlantic City and County Local Board of Realtors through Keller Williams and KW Commercial. And I am also a regional chair, as Gary, with FIBRE, the Foundation for International Blockchain and Real Estate Expertise. More recently, I co-founded a real estate tokenization DAO, Decentralized Autonomous Organization. It kind of brings forth my past history working in affordable housing counseling and credit building and helping the community learn about ways and how they can participate in home ownership in this land we call America. I'm passionate about helping people to achieve their goals in business as well as in home ownership. Thank you for having me here today.
Well, thank you. I think it's great that we have real practitioners, real estate people that have an inkling for technology. So I think the first question is, interested in everyone's opinion on where's the aha moment with this intersection between what we do as real estate professionals and this technology platform and this new concept for liquidity and digital assets. Where's the big aha moment in your opinion?
Ladies first,
Yeah.
okay. Aha moment for me is the trustless environment. In my background in history and how land was stolen by the flip of a pen and inaccurate data and information being taken as gospel. The blockchain can help prevent those types of things and keeping record of things, which is why I think it's important of the work that organizations like Profi is doing in helping other countries migrate their data onto the blockchain for title records. But the fact that anyone can participate in fractionalized ownership of real estate, I think is game changing. I think that it will help us to envision a better world in the built environment and how we all create based off of our current needs. I think it will speed up the rate at which we can accomplish creating sustainable communities and more socially adept communities responsive to how we want to live and move in the world today.
Got it. So if I had to sum up your comments, fractionalization is potentially your big sort of the aha moment here.
Yes.
Sam?
So is this the right guy, wrong question, or is this the wrong guy?
You're stuck in the middle. You have to answer the question.
No, the aha moment to me is all about accuracy, accuracy and transparency. So, whatever every real estate developer or operator wants is better information to make efficient decisions based on real data, and allows them to execute their business plan. I think that, in the end, that for me is the aha moment.
And Sam, before you connected with Invenium, just give us an example of one pain point as a multifamily developer where you sort of cringed or had that moment of frustration where you didn't have that.
Just one?
Well, yeah, just
We only have 20
so much
minutes.
time. We only have so much time.
No, I mean it's as simple as managing a business with Excel spreadsheets and Word docs and PDFs. knowing things like OneDrive and Teams and trying to locate documents, having floor-to-ceiling file cabinets with God knows what inside of it. So that really is what it is. I mean, it's really it's providing structured to unstructured worlds, and a lot of our us owner operators we're unstructured, and this really allows us to be structured.
Okay, so transparency and data management. Got it. Shannon?
I love the file inside the file. You know, I can't find it. It's in this file. For me, I think that it's about speed and accuracy, speed and liquidity. You know, being in the market that we're in, things are so hyper competitive with where assets are trading and the speed at which you need to be able to execute, be able to put it under contract, be able to put up the earnest money, be able to do your due diligence to close, and then once you're done, being able to create liquidity on the backside of that for your investors, I think was when I just went, this is nuts. This is exactly where we need to be, because now the ability to transact just becomes a question of how quickly can we do this, and not looking at the lockup period for a year or 3 years or 5 years, or having to get all of our investors on the same business model. Why? I want appreciation. I'm looking for cash flow. I'm looking for tax advantages. It really doesn't matter at that point.
Okay, so liquidity.
Yeah.
So we have liquidity, good information, and fractionalization. They all relate to each other in a way, right? Fractionalization and liquidity, right? Very similar, right? If we're bringing liquidity, that means fractionalization, giving your investors the option to potentially trade out of your assets without you having to sell them, correct? And then we can't do any of that unless we have good information. Okay, great. So one of the challenges that we have in the real estate business is understanding the difference between a real estate-backed digital asset and other digital assets, such as cryptocurrencies that exist today that are backed by either scarcity or entries in a distributed ledger. So one of the things that we have to do as real estate folks in this technology space is make sure that we do a good job of explaining the difference between, let's say, a cryptocurrency that's backed by some sort of, I wouldn't call it phantom value, but some intrinsic value or value that's not like real estate. Let's just make it like that. So what do you think the best way for us to sort of communicate to this audience on what the difference between what we're thinking about real estate digital assets and what other assets are like, digital assets are like?
Well, it's kind of like the difference between fiat now and when the dollar was backed by gold. You have one scenario where it's really backed by nothing. It can be very volatile and scary, God knows what. Or you can have a smart contract that includes either the revenue value of a real estate or the revenue of the property.
Yeah, I mean, it's like the dot-com bubble, where I'd say we had all these companies selling for massive dollars, and for what? It was a concept. It was not proven. It was not revenue producing. So I think the important thing is using the right words, because when you talk crypto, 75% of the people outside this room go to Bitcoin, and that's just what our mind reads. And I think that the important thing in real estate to focus on is that a token is just a digital verification. That's really what it is. So whether you're digitally verifying data, or value or whatever it is, that's what a token is. Let's not confuse ourselves by using. Last week, 2 weeks ago at the convention at University of Austin, they were talking about don't use blockchain, don't use the word anymore. It's like the faux pas word. I would go as far as saying don't use crypto. Let's just call it what it is. It's a token. It's digitally verifying data. That's it.
It's digitally verifying someone's ownership interest in,
exactly.
in our business, a hard asset or a building or a group of buildings. Right, okay. Shannon?
Yeah, and I think that, somebody mentioned it yesterday, the only thing that had changed in their industry of 20 years, I think, in IRAs was the introduction of DocuSign. We're not that far behind. I mean, I still have a fax, Sam, do you?
No, no, I have e-fax.
Okay, well,
You can Google it.
okay,
It's just a number.
I'll ask my kids how to do that. But the reality is, when you look at the way that we need to bring that to the present, it's more of an understanding. I mean, I'm still having a hard time wrapping my head around how all of us in this room can tokenize and own a part of the Mona Lisa, but I don't have a problem doing that with an apartment complex, right? I don't have a problem understanding how you can tokenize and fractionalize that, because we already do that in syndication. Now it's just introducing the technology and the phrases to people and getting them to understand that this is a token.
Right, so, because we already fractionalize in a way, right? Because we create a limited partnership or an LLC. We bring investors in. It could be 1 or 2 investors. It could be 100 investors. So whatever how many investors you have, you're already fractionalizing that asset through the ownership structure. This idea, the idea of tokenization in digital, is fractionalizing it in multiples of that, right? So for example, I have an asset that has 26 investors in it. If I tokenize that and then let my investors fractionalize their ownership, then that 26 can turn into 1,000 eventually, right? And then how do you manage that? That's the challenge. That's what a lot of the technology folks in this room are trying to figure out and solve for us, right? We're your customers at some point, right? It's really challenging, and I think the perception is really, really important. And I think the benefit of the real estate space is that 98% of the real estate in the US is owned in private entities, private structures. The rest is owned by publicly traded REITs. So it's a really small percentage. The majority of real estate is owned in private partnerships, and that's the real opportunity that Dave was talking about earlier. My next topic is this. As I looked at this market and I've looked at the opportunity for real estate, our business, sometimes I think the opportunity is actually larger on the debt side than the equity side. So I'd love to get your take on how you see potentially the debt side of our business and how we use debt to make money for us and our investors potentially can be enhanced or improved through this type of technology.
Gary, before you move on to that, I just want to go back to the previous question. And I think it's really important that we get the message clear to the public and the difference of digitizing the assets of real estate versus cryptocurrency. Because I talk to people consistently who are confused about cryptocurrency and real estate tokenization. The two are very, very different. And a lot of people have been burned by cryptocurrency and they're afraid. But for us to communicate the difference in this industry and how it is managed with tokens and how we create the environment of more of a safe environment with digitizing the asset of real estate. Getting that message across of how we're using traditional methods of investing that many people may not have been aware of that has been used in America, and we're putting it on a blockchain. And for us as companies dealing with the public and working with bringing out the message of this new technology and new way of doing business and transacting with real estate, it's really important to get across the difference between traditional cryptocurrency and non-fungible tokens that just represents an image with nothing back behind it, and what we're actually backing with real estate.
That's a great point, right? We're talking about hard assets, things you can see, you can touch, you can sit in, you can ride the elevator up and down in it. So it's a much different perspective, and it's important.
And it's an education process that we have to do.
Debt, let's talk about debt. You know, I know every property that I own has a mortgage. Sometimes we have 2 mortgages. Sometimes dealing with lenders is not the easiest thing to do. They're a regulated industry, so they have regulations and requirements that they push down to us, and sometimes, especially during a global pandemic, dealing with a lender can be difficult. Do you guys see any opportunities on the debt side for real estate within the digital asset community?
Yeah, I mean, I think that I think the guy who comes out with the 3%, 4% bond token, they're going to do great, because the way I see this is that it's really an opportunity from the cash out refi standpoint to replace, the token can replace the Fannie concept, right? So,
Or how about CMBS?
right. So CMBS Fannie, like what's
Does everyone know what CMBS is? Commercial mortgage-backed securities? Okay, great.
Not credit back, by the way. We're not going there. So I just think that it's the same concept, but it will work better with tokens. So if people can put up their money in a bond-like structure that is really just owning multiple pieces of debt on real estate, again, it's a tangible asset. So to a lot of people, that's a dream come true. And from an owner standpoint, I'd love to have a little bit less on the reporting front. So that's where I see the opportunity. I don't see. I see that same concept being able to replace some equity, but from an equity standpoint, I think it's important to own the asset first before you token either side of it.
Oh, I agree, yeah.
And I think I dovetail on what Sam's thinking and bring it back to what Teresa said. It's the education piece that's missing, right? I mean, we've never really thought about how to bring a bond type structure to a tokenized asset to multifamily. We've looked at that with municipalities, but we've never done it at that level. So I think it's just a matter of timing and education, but I think it's forums just like this, it's communities just like this, it's conversations just like this that are gonna make that a reality.
Yeah, and just to follow up on that, I mean, it's, we're all up here talking about, transparency, right? There's this negative connotation in the past about, large funds, owner-operators that you didn't really know well, then you got Crowd, Street that just throws it in there and, hey, you can put $500 here and $1,000 here, like it's an auction. I think that it starts with education. I think part of the education is what we're all striving for in this room, right? It's transparency. It's real data, which leads to transparency and trust. And once that happens, and it's going to be a long time since I can sell trust or he can sell trust, but we can sell transparency and real data. And I think the education, transparency, all that leads to what we all want, which is that bond structure and multifamily.
Right, and how about the concept of a hybrid token? So you're issuing a token that's partial debt, so that token holder's getting that recurring payment, but they're also getting the upside on the equity. Can anyone see that happening? Teresa?
Yes, it is already happening. You can have tokens that includes equity where they're sharing in a part of the revenue. Governance tokens that help with managing the property and the asset. The investors can participate in multiple ways of the property ownership and management, and the property owner can relinquish various levels, and it just all be in the smart contract. And so I personally think that real estate tokenization will replace debt as we know it today through getting a mortgage loan on a property. I think that the community will be able to participate in the growth and development based off of the smart contract and through tokenization. Companies like Helio Lending will, I think, replace hard money lenders. You get your 70% LTV from your cryptocurrency and close with.
I think the reality is the good thing is we can make these tokens reflect almost anything that makes sense for our industry, and I think it's in a way up to industry professionals in our specific space to hopefully communicate with the technology world to tell you what we want, right?
We're not reinventing the capital stack here, right? So I mean,
No.
you have pref equity. You've seen the charts year in, year out. So why should this be any different? The equity fund throws off 12 when the debt fund throws off 4, and you merge it together, you get a blended rate of 6.5, right? That's not rocket science. The only difference is it's tokenization just provides a little bit more transparency on that.
Flexibility. Options.
Agreed.
I mean, could
Right
you
person,
see
the right
could you see a
question.
hybrid token being sort of the industry standard, or do you still see that separation between debt and equity?
I think you're going to see that a hybrid token's going to take take some time. And I think that you're going to see people that are going to want to pick. You know, I mean, my dad and I are two very different investors, right? I mean, he's looking for that first position. He's never going to look at a hybrid token as something that he wants. Yes, it creates more, pays better, but the reality is it doesn't do what he wants it to do. He needs to be in front of the equity stack, and most of Sam's crowd's going to want that 12%.
Yeah.
You know.
Yeah.
I think eventually investors will demand that part of the project be tokenized. And to what extent that occurs, I think is up to the future once they figure out what's going on and what's available to them.
To me, having a hybrid token and a capital stack made of a single sort of structure, one, it would be, I think, great for investors, but two, it would make my life a lot easier, to be honest with you. One of the biggest pain points for me, and I'm interested in your thoughts, is you find an asset, you want to buy it, and I've always said, if I've got a good real estate deal, I can raise as much money as I want, because there's always investors for good real estate deals. The challenge is dealing with a bank, and depending on where we are in the economic cycle, where that asset sits, what kind of asset type it is. Some lenders will never lend on hotels, they only do multifamily. Some like shopping centers, So finding that right lender with the right sort of sensibility for your asset can be a very challenging environment. And then to get the loan closed is another challenging environment. And then once you have the loan closed, dealing with the ongoing management of that loan, covenant, reporting, and so forth. A hybrid token, in a way, gives the investor the best of both. They get a recurring payment, and they have the upside and the equity. So.
Yes, but
okay.
Let's call a spade a spade. I mean, let's remember that the lender's requirements, at least, I'll say 50% of them are in place for a reason. Let's not lose sight of the fact that we still do need some of those. We still do need, that debt coverage ratio. There's a reason why we need that. There's a reason why you need to do the reporting that you do, and I don't want that concept, the backing, the restriction, the regulation.
So this gets back to your stuff, your point of information transparency and accuracy. So if we end up moving away from traditional banks that are regulated, that require us to do those types of things, that's a concern for you.
Well, I'm not going to say it's a concern, but when we start, it's like anything in this economic environment, right? Everyone wants to do it quicker, better, faster, so let's just combine them all, right? So that the hybrid, in theory, works with the right people doing it, the right policies and procedures in place. I'm not really looking to go to third base before I run second. I think it's important that we prove that the debt and the equity token work on its own. And then if there's a hybrid down the road, I mean, listen, it's like, do you buy a bond or do you, buy a riskier stock? The answer is you do a combination of the two based on what your investment needs are. So I think the same thing, holds true for someone who's investing in real estate.
Okay, so this will be the last question, and then we'll round it up. So Sam, you had mentioned the importance of information, accuracy, etc. One of the things we're all going to have to do as real estate owners, if we want to move into this digital asset world, is provide a lot more information into the public sphere, right, or the public world, than we traditionally have to do as private investors. So how do we get comfortable doing that? What kind of information are we going to have to provide to the public that we don't provide now in order to allow our digital underlying asset or representation of ownership to potentially trade and have liquidity?
Well, in the syndication world, we're already providing it, right? We're already doing quarterly distributions, we're doing quarterly reporting. So we're providing a lot of that information already. It's just going to be doing it in a format that the information follows the token, right?
So you think quarterly reporting is enough if you have a tradable token?
I think we'd probably have to increase that.
Okay.
But we're already doing that to some degree. I know that people that are some people are doing annual reporting and calling it good. It just really depends, right? So I think that the reality is, how are you going to have that information transfer and follow the token itself so that is attached is really going to be, I think, what's going to be there, because the ability for us to give that information is there because we have it. It's just a matter of getting it out there and
So Shannon, let me give you an example, and Sam, I'll get to you. So we own about 1 million square feet of office space. When we send information to our investors on a quarterly basis, we give occupancy levels, market rent levels, but I don't give out the information of my rent roll, who my tenants are, when their leases expire, because if that gets in the wrong hands, boy, I'm giving out some information that I don't necessarily want the public to know, or other real estate owners to know, and frankly, my investors don't want me to give that information out, because frankly, that could jeopardize the value of my asset. How do I protect that information but give enough information so that if someone is looking to buy a real estate token, they're looking at my fund, and they have enough information to make a good buying decision?
I would say Invenium's the answer to that. No, I'm sorry, cheap plug. No, seriously, we all have the same inputs. So I say this all the time. It's about the outputs. It's not about the inputs. So, you know, it's...
But hold on. Bad information in is bad information out, correct?
Correct. So as an owner, it's our responsibility to make sure that we're inputting proper information. So then it's a matter of what are we doing with that? How are we transferring it? And who's using that data and how are they getting it? So secure portals are the answers as far as I'm concerned. Keeping that data on a secure portal. And at the end of the day, the more information we share, obviously you said, you know, you don't share your rent roll, but you would have no problem sharing your rents, your rent per square foot, on not necessarily your tenant, but to share that information is helpful to everyone. So whether it's CoStar giving you the wrong information,
Who am I trying to help?
in the end, you're going to help yourself, because you know it's not about just because you're getting $2 and the guy next to you is getting 2 1/4. You know, if they share that 2 1/4, are they helping you?
Yes.
Okay, so if you share your $2, are you helping them?
Yes.
So why wouldn't you share it?
Okay, so
in the end, what we all want is real, accurate information.
we own hotels in our portfolio. We get Smith Travel reports every week and every month. That's exactly what happens in Smith Travel reports. We all voluntarily give our information to Smith Travel reports. We then get back reports about how that group of 6 or 7 hotels are doing. We don't know what the averages are made up of, right? Because we don't know what specific hotels gave what information, but we can compare our results to the group results. So it allows us, we don't have that in the office space business. We don't necessarily have that in the multifamily space. We don't have it in the retail space. But that is one example of real good information. Now, I'm giving my information voluntarily. No one's checking it. But, like you said, Sam, doesn't do me any good to inflate my numbers to make myself feel better. It just hurts that negates the information and the accuracy of the information.
Right, but let's remember, we're not sharing this information to raise money. We're not sharing this information to go out to the street and try to raise more equity. So we try to, make our numbers look better. We're sharing this information because it's the information that's driving the market that we're living in. So at the end of the day, you say you don't have it in an office, but let's be honest, CoStar's been around for a long time, and that's what they pride themselves on is information. We can all agree in this room the accuracy of that information, but at the end of the day, if this all works and we all do our parts as owners, you are going to have the accurate information, and that's going to make all of us better in the end.
I hope you're right. I hope you're right. I think that gets back to what we all talked about education, right? Changing minds. The challenge with our industry is we're, with the exception of this panel, not the most forward-thinking group of professionals, and frankly, the industry overall. Would anyone argue that real estate is a slow-moving, slow-adopting industry in general?
Historically, it has been.
Do you think we have an opportunity to, well, obviously we have the opportunity to change it. Will we actually do it?
I think we will. I think we have to.
Okay.
And back to your
Sam's got a smirk on his face. I'm not sure he agrees with that.
No, listen. It's like any industry. It's a private-public conversation, right? So if I'm standing up here and telling you that government's going to adopt this, and policies are going to change, that's a pipe dream. To say that that's going to happen fast. Let's be honest. I mean, in the last year and a half, it took to lift the eviction moratorium. So. I don't think from a policy and procedure standpoint anything's moving fast, but I wouldn't categorize real estate as a slow mover. I think that the fact that we're all here in the same room talking about blockchain and real estate that's kind of fast. It hasn't been around that long. So I think that as far as innovation goes, I think tech and real estate can be on the forefront of this, and are right now, versus other industries that are just kind of waiting for proof.
So one of the things I talked about yesterday was the difference between prop tech and what we're talking about here in digital assets. I think they're two different things. And if there's a disagreement, I'd love to hear it. So I think you're right. I think real estate's been much more creative and forward-thinking on, energy-saving HVAC systems, security systems, access systems, lighting, elevators, smart elevators, things like that. We're talking about a completely different topic.
Yeah,
Digital
let's
assets.
not package it all together.
I agree. That's what I'm saying. They're two separate topics.
Totally.
Well, and I think, the real estate industry is going to be a quick adapter of this because we're all here for the returns. We're all here to do transactions and to take care of our investors and to move our profitability forward. And so we're not, I think as real estate investors, we're not typically sitting around waiting for government to solve the problem. So having access to this kind of information, this kind of digital platform, to be able to take care of these problems ourselves as we see fit, which is why we have all these, friendly competitors in the room, because we're all sitting here looking at it going, I need to solve my problem, and by the way, could somebody else use my solution? So I think you're gonna see it move in that direction, just because that's the way that innovators do.
So we have
Gary, I don't know if you know this, but Mark with Vibri in Florida, he is putting on an entire conference with the government over the next week in DC. Yes, so that's all they're going to be doing is educating people in government about real estate tokenization.
Great. That's good to know. So just
dreamer.
Yeah, really. So just real quick summary. Fractionalization, number one. Information transparency and liquidity. Those are the three things that these guys care about the most, or think are the most impactful. So as you think about your technology plays, your strategies with technology, and getting into the real estate space, those are the things you have to think about. Thank you.
Thank you.
Thank you.